And that brings us to our topic here, all about Bitcoin and digital assets. James Butterfill joining me here today, head of research at CoinShares. Thank you for being here. Look, we just managed to hit 50,000, and that was a big deal because even when those ETFs were approved, we were at 49,000. We didn't get to 50,000 during that week. What do you think is giving this little push here to that 50,000 mark now of late?
Yeah, it's a very psychological level, 50,000, as was 45 and 40. There are a lot of technical traders in Bitcoin at the moment, and they sort of plug into their models these kind of numbers. And I think what's really driven it up past 50,000 is, it sounds kind of stupid, but more buying than selling. And to put some substance to those words, I think it's a lot of ETFs in the United States. They're really becoming very successful in terms of inflows. The iShares ETF now has pipped past the $5 billion mark. And if we look at the total inflows of the newly issued ETFs, they're at $10.6 billion in just over a month. So really quite significant. Net off the outflows from Grayscale, and we're still at $4 billion worth of inflows. That, to put that in perspective, when iShares launched their gold fund, they had $125 million of inflows in the first month. So this is really quite substantial inflows.
Yeah, I mean, it really is. So I guess people are willing to take on risk because there's still risk involved with these ETFs, right?
Yeah, they track the Bitcoin price one for one. They're highly volatile. Bitcoin is volatile, more volatile to perhaps other investment assets you're used to. It trades at around 40% annualized vol, so that's more than roughly double the Nasdaq at the moment. But in terms of investing in Bitcoin, it's perhaps one of the safer ways to invest because you have institutional grade custody rather than perhaps custodying on your own on a ledger device, for instance.
Do we find that, I guess it's a digital currency, it's decentralized, it has a lot of anonymity to it. I know the ETFs are correlated to some of these big institutions, but do you still feel like there could be concerns if someone did it a different way, if they could maybe get scammed or something like that? Because that was something that has happened in the past.
I mean, I think it's quite the contrary, actually, in terms of anonymity. The FBI had the largest ever financial haul of $3.6 billion, and it happened to be in Bitcoin, and it happened to be a crime that happened over 7 years ago when an exchange was hacked. The thing about Bitcoin is it is a ledger, and a ledger of transactions that is permanent. So if you committed a crime in Bitcoin even years ago, that there's a permanent public record of that. And to the detriment of many people, and in fact, Hamas tried to use it as Bitcoin funding and advised over a year ago now to not use it for the very fact that it is this public ledger. So actually, being anonymous is quite a difficult thing, and as a criminal, I would advise people not to use it for that reason.
Yeah. Look, I'm happy to hear it because, we always heard that it was good for money laundering and human trafficking and scams and things like that. So I tend to agree with you in that the more we have Bitcoin, the longer we have Bitcoin, the more we see Bitcoin, the more we get approval into these ETFs, then people trust it more. When we think about other ways to have exposure to digital assets, you have Ethereum, you can buy stocks that have some sort of Bitcoin along with them. I mean, there's many ways to do this, right? What has your research been pointing at that has been popular of late or of interest?
Yeah, actually, Bitcoin primarily, partly because it has that stamp of approval from the SEC now. And that was a big worry amongst investors. Around 60% in our survey said a government ban or regulation was a big concern for them. And now that issue is resolved. they're trying to many portfolio managers are dealing with a problem of very high correlation between equities and bonds. The 60-40 portfolio is dying. And so there is this hunt for an alternative asset that diversifies. And in that alternative asset bucket, you have Bitcoin, golds, commodities, REITs, etc. And Bitcoin absolutely diversifies by far way better empirically than any other asset class over the last alternative asset over the last 5 years. And that's a big reason why we see investors buying it right now.
Yeah, how about the halving? That often can be a catalyst too, and that is going to happen. It happens every 4 years, right? And that's set to happen in April of this year. What could be some other catalysts going forward? Do you expect to see more ETFs filing for approval?
Yeah, that's right. So there are quite a lot of price catalysts for Bitcoin. It is closely inversely linked to monetary policy. So loose monetary policy would be quite supportive. In terms of the halving, this is perfectly known information. It's a bit like equity markets knowing something before the event. They tend to price it beforehand. So I'm actually skeptical that the halving will drive price up, because you can see that when the supply is going to be cut on roughly April the 19th. And with regards to Ethereum, I do think attention might begin to switch focus towards Ethereum. Chances are quite high that the SEC will approve an Ethereum ETF in May this year, late May. And we already got a little bit of a taste of what might happen to the Ethereum price, because on the day that the Bitcoin ETF was approved, we saw the Ethereum price really outperform Bitcoin, and it highlighted, I suppose, a sort of anticipation of investors that it's next in line to have this kind of ETF approval from the SEC.
Yeah, so we will watch for that. I mean, I wouldn't be surprised to see more about Ethereum, and it's becoming more mainstream. I mean, just the final thought, sort of out of the box a little bit. I mean, there were folks who were looking for Bitcoin to rise. It's had a lot of volatility. It actually held up during some of the most volatile times of the markets, and showed that it held on strong. Right now, around this 50,000 mark, are you hearing anybody say 100,000 or more?
Interestingly, the volumes are quite low, and so this is sort of climbing higher, grinding higher on quite scant volumes, which suggests there could be, there's a lot of open interest at 50,000. So in my view, it could push quite quickly, quite easily to 60,000 this year. I've written a piece of research looking at fund inflows and the impact on price, and there is a relationship. If we were to see, say, not 4 billion, but $6 or $7 billion, that could easily push us past the previous all-time highs of 69,000.
Mm-hmm. Thank you so much, James Butterfill. It's great to chat with you today, head of research at CoinShares. This as we're seeing Bitcoin again at these new highs, over 51,000 today.